Hey everybody, good evening. Welcome in. We're gonna get started here in just a couple of minutes. Just gonna give everybody the chance to hop on in here. We'll get started a couple minutes after the hour. How you guys all doing tonight? All right. Love to hear it. Very cool. Should be a back to basics lecture of sorts tonight. Switching things up a little bit after we just wrapped up our course series and had some other kind of miscellaneous lectures towards the end of it there. Um, Also kind of in line with what River has going on too. I know he's got a little crash course as well, so kind of thematic for us to get the basics going as we close out the year. We'll give it like one more minute before we get into it for tonight. While we wait for some other people to show up, I guess I'll start by asking a question. How many of you are not familiar with what volume is? Is anybody in here totally unclear on what volume represents, what it means? Or does everybody kind of have at least a basic idea of what volume is? 50-50 understanding. All right, that's pretty good. That's a good start. We can work with that. Cool. Volume means how many people are buying or selling. Yeah, that's a great place to start. Yep, amount of stock being bought. Yeah, you guys got it. Yeah, that's totally the right idea. You guys are on point. Cool. Well, a couple minutes after the hour, I'm gonna send one more message out letting everybody know we're getting started and we'll get right into it. But yeah, you guys seem like you're already decently comfortable with the basics, so maybe we won't spend too much time on it. All right. Well, welcome in everybody. Welcome to tonight's lecture. It's titled Volume Price Analysis. I figure we'll start with some of the basics, just kind of defining volume and getting everybody on the same page with what that represents before we get into some more of the nitty gritty. Um, but with that, welcome in. Let's get right into it. So tonight's class is all about volume, and starting with the basics here, very simply put, volume represents the number of shares traded within a given period. So for example, right now, we're looking at the daily chart. So these volume bars down here at the bottom of the chart, I'll close this out so we can focus a little bit better. These volume bars down here at the bottom of the chart represent the number of shares traded in a given period. And again, this is a daily, so this is the number of shares traded every daily candle. Um, and another kind of way to think about volume is it also represents a monetary value of shares traded as well. Directly, the volume has a number of shares traded. So for example, on some days you can see the number here. Some days for the S&P, it's 54 million. Other days it's been up to 256 million. And one way to kind of, I'll say, rationalize what that number actually represents is if you multiply the volume by even just the closing share price of a given day, that helps you understand the magnitude of the amount of money that's exchanging hands on a given asset within a given day. So let's just quickly pull up a calculator. Let's do an average. S&P has kind of been around averaging, let's just say 90 million volume recently. Well, let's just do today, actually. Today we traded 74.4 million shares. And our closing price was 677.58, 677.58. So that gives us $50 billion worth of shares traded on just the S&P 500 ETF alone in a single day. So hopefully this helps kind of conceptualize or help rationalize why volume can be so significant, because it really does directly correlate to a financial or monetary value. And as we see kind of above average or below average levels of volume, that indicates higher or lower amounts of trading activity. And we'll get into some more specific scenarios as we continue throughout the lecture, but I just wanted to go through that kind of basic exercise. The other thing I want to point out is volume is generally presented to us on all sorts of assets. So in this case, we're just looking at a pretty standard ETF. If we looked at a single stock or a single equity like Apple, we still have volume on the bottom here. If we look at futures, so the S&P 500 futures here, we still have volume at the bottom here. If we look at maybe the GLD gold ETF, same idea, we still get that volume. Even if we look at an options contract, so if we look at SPY, let's look at 2026, January 16th calls for, let's just do 700 calls. We also can see the volume of this option contract as well. So this is the recent volume on the 600 or 700 calls for January, right? So pretty kind of nifty as well. So volume is super prevalent on a lot of types of assets. It's certainly not just an individual asset thing. And one thing that I'll highlight that's a little bit off topic, but I'll mention it anyway, is volume in option contracts and unusual volume in option contracts contributes to what people typically refer to as options flow. So when you see those kind of unusual or abnormal purchases in the options market, those are typically highlighted as options flow because they're a bit abnormal. So anyway, that's the just kind of raw basics of volume. The last thing that I'll show you is kind of another useful just way of understanding why the daily time frame is so much more significant than others. So we kind of established that today's daily bar on the S&P represents $50 billion worth of trading activity. If you zoom in onto something like the 5-minute for today, we can look at, even the highest volume 5-minute bar traded 5 million shares, right? So that's a large fraction, but a fraction of what was traded within the day. And that's kind of why these moves happening on the lower time frames are much less significant than what's going on the daily time frames. Like, for example, when you see, a breakout on the 5-minute here, we might have a little bit of a breakout into new highs right at this spot here. It matters for sure, but it is so much less significant than some kind of daily breakout, right? Because here we saw 727,000 shares traded on this breakout bar. That's, in the grand scheme of things, that's really not that many shares. It's not that much money. Considering, on a daily basis, we're trading 90 million shares. So 700,000 is less than 1% of that. It's really not a big deal. But when we see these kind of daily breakouts on some more significant volume, which isn't something that we got recently, I wouldn't argue that we had any kind of significant above average volume recently, but this is where you would really want to be paying attention for a super strong breakout or something to really keep your eyes on. One notable one that we can refer to is GLD. I know we were just talking about it. This one's pretty straightforward. You can see probably right away the amount of volume that started pouring into this name. It's pretty evident that there was a lot of money flowing in to this metal. Gold, GLD represents just physical gold or the price of physical gold. And it's pretty evident just based on this increase in volume as we start to break out of this, flat base or flag or whatever you want to call it, that people are certainly running into this name and getting real excited about buying. So that's kind of the basics of volume. And I just wanted to make sure that everybody understood that piece before we get into some more volume price analysis focused concepts. Before I talk, I got a couple more things to highlight on the basics before I move on. Any questions so far? Is everything kind of making sense? Cool. We got a thumbs up. All right. And as always, guys, in these classes, you can feel free to unmute your mic at any time. You're more than welcome to do so. I've been blessed that everybody in here has been really, really respectful and polite for the last couple months. When I first started doing these classes, we had a lot more people who weren't so serious. And made that kind of a problem. But you guys are all focused and locked in, so it hasn't been an issue. Okay, last thing that I want to mention, and this is one of my favorite live examples to do, so hopefully it goes well for us, is volume represents real-time trading activity. And since we're in the after hours here, well, actually, let's do on demand. I don't use this too much, so let's try doing this. So this is going to rewind us to the past here. This is kind of Thinkorswim's simulation tool. And let's go, let's see, can we go to, yeah, let's just do earlier today. So let's go to November. Oh, the 5th isn't available to us yet. Oh, it's a little slow. Maybe this was a bad idea. Can I just do that? Will that work? Cool. Okay. So what I just did right now is I put us like we're simulated looking at market open on October 27th, right at 6:30 in the morning. So let's see if this loads for us real quick. Zoom in, and I want to be able to see kind of real volume coming through. Looks like it's just getting things set up, but hopefully this example is as good as I'm thinking it will be. And we'll pull up time and sales as well. All right, we'll give it just a second, and hopefully this loads. It's, I guess, always risky for me trying something new. All right, here we go. So check this out. Let me just pause it real quick. Oh man, this is going super crazy. So this is probably a pretty close simulation to what you might expect to see at the market open, right? So we're looking at 1 minute candles, so it'll be pretty volatile. And what we're going to do is we're going to show every single trade going on in the market. So on the right pane here, this is the live data of trades happening every instant. So you can see once I click play again, it's going to just be spamming. I mean, constantly flowing. And these are the real orders that are taking place in the market right now. And you can kind of see, and what I like to do for names like this is filter for large size. And it's not super often that we're going to get super significant size. But when we do get really large sized orders, it'll be pretty evident in the time and sales here. And maybe I could even drop the size just a little bit. There we go. So some 6,000 orders, you probably saw price kind of drop down after we saw those larger sells. And let's even see if we could show a bit larger or smaller orders as well. So we'll keep kind of watching, and there we go. We saw some 2,000 size orders. It looks like price didn't do much. Yeah, so we're not seeing much in price movement as we see these larger size orders come in. But the one thing that's most important to note is as we see these orders come in on the right side here, we see that volume bar at the bottom of our candle continue to move higher. So without these orders coming through, and just as a reminder, we're filtering out a bunch of them. So as we see these orders come through down here, we should start to see that volume bar change and accumulate the total number of shares that are actually being traded. So anyway, just kind of wanted to highlight that and show you guys what volume truly is comprised of. All it is a total number of shares traded in a given period. And we're seeing instantaneous shares traded, every single one of the lines in this time and sales is an individual order. This is one order, this is one order, this is one order, and this is one order. So every single trade here is a single order being placed by somebody or some institution. And as these orders come through, the amount of volume we see on the given bar begins to increment and totalize the amount of trades that happened during that period. And even if we zoom out to the higher timeframes, we'll see, that same level of volume accumulation. Now we're here on the 5 minute. If we go back to the daily, we'll start to see that daily bar as well begin to accumulate some volume very slowly. So if we see, this is what the candle looks like. And if you're watching the number down here, you can see as those trades come in on the right, we're seeing that volume add up as we get more and more trading activity. So this is exactly what the market looks like in any given day. And I'll just take us out of simulation and change us over to the overnight futures, just because I always like to do this example as well. I find it to be pretty fascinating. So this is the live market now. This is overnight futures, and they trade with a little bit lower volume. So it's kind of easier for us to see significant changes, which is why I like to kind of do this as well. So let's just zoom in real quick. All right. And now, usually when we see orders of large size in these overnight futures, it's super obvious. So for now in the time of sales, and again, this is live data, this is really happening right now. So for now, we're getting a whole bunch of ones, so nothing too crazy. One contract, two contracts here or there. If we start to see some size, it'll be really obvious. But if I hover over this volume bar, you can see it's really not adding up by much. You can see the current amount of volume in the given candle here. And as I hover over the bar, we can see it's really not moving nearly as quickly as our S&P was. And I'm hoping we see it at some point in the next minute or two. But usually when you see a real large order, it's pretty obvious to see price change based on that order. So hopefully we get one, but if not, I'm not going to stress too hard about it. I just wanted to make it clear that this shows kind of the live transactions that are happening in the market. And I'll show you guys one other thing as well, just so you're aware of it. But this is really where all the volume data comes from. It's pretty simple in terms of what it is. It's just there's a lot of information all the time going on. So it can be kind of difficult to think through. All right, maybe we'll look at that towards the end, Norvin. Cool. All right, and the other thing that I will show you guys, just while we're on the topic of kind of understanding live market data, if you take a look at the level twos, this is going to be a little bit simpler than what you'll normally see. And if you're on mobile, I can totally imagine that it's super, super difficult to see this right now. And it's also, I'm surprised we're not seeing any more depth than this right now. I don't know if that's just a setting. Maybe it's a futures thing. Okay, maybe this isn't as good of an example with this data because it's kind of doesn't really reflect what level two normally looks like. I'd never look at level two on futures, so that's something new for me. Yeah, KP, that's an interesting question. So yeah, volume on its own doesn't necessarily mean price is going to go up or price is going to go down. That's why you call it volume price analysis, right? You can't really analyze one without the other, in my opinion. You definitely can't analyze volume without price. Some people think you can analyze price without volume. I personally disagree, and a lot of others do as well, but just want to make it clear. But anyway, volume on its own means nothing, right? If you're just looking at this chart, you can't really do anything with that. There's clearly some colors here which help us infer what happened in these candles, which helps. But if they were just all, the same color, it would mean absolutely nothing. So you've got to be analyzing volume with price as well. So for example, when we're getting, maybe in this case, a really high volume breakdown, I'll try and zoom out a little bit. When we get this high volume breakdown, so as price moves lower, we see significant amounts of sellers stepping in here. That's probably a bit of a red flag, right? And I just realized I'm not on a temporary drawing set, so I'm going to get rid of that stuff here. And we'll just kind of monitor this chart for some different examples as we continue throughout the lecture, because some of these live examples can be really, really fun to take a look at. But the interesting piece that I want to just highlight with this example is you can see once we broke down below this level, it's very obvious to anybody, right? It should be very clear that a significant amount of sellers stepped in, right? If we just look at this graph, our average volume is maybe somewhere around here. And very clearly, we have plenty of above average bars during this period. And as price moves lower, we see that reflected. And once we revisit these same levels, sellers are still present at this exact same area, right? So clearly sellers were looking to sell the market at this area previously. And once we revisit those same areas, we see that same sort of selling pressure return. Now, again, this is a 1 minute chart. So there's really only so many conclusions that you can draw from it. We've had some good luck in lectures before and getting some really good examples from the 1 minute chart on futures. But in general, you're never going to catch me trying to do this sort of analysis on the 1 minute chart. I only do it in class because it's just a really good and quick example for us live. But just to directly answer your question, KP, volume shows how many shares were traded between the open and close of the candle, full stop. And it's up to us to determine if that's mostly buying volume or mostly selling volume. And typically the way you look at it is if the closing price of the current day is greater than the open price of the current day, you're probably going to look at that as a majority buy day. Like on a day like today, let's just zoom out a little bit and take a look at the daily. We got basically an average buy day, right? This isn't really above average volume by any means. this looks just like a pretty average buy day. So not crazy buying pressure. We also haven't had really crazy selling pressure recently either. It's just, kind of a normal day of buying for people based on this level of volume, right? And again, I'm just eyeballing the average volume right now. There's plenty more scientific ways to do that, which we'll get into. But if you just take the average volume to be kind of the middle ground of some of these plots here, it looks to be a super, super average day. Hopefully that helps. All right, any other questions before we keep rolling?
Hey, Toasty. So this
Hey.
isn't necessarily a specific question. It's something that I have heard multiple times in terms of a concern that the market is moving up on limited volume. And
Mm,
so if I just kind of wanted to get your opinion on that and how you fit that into volumetric analysis, is it kind of a lot of people sitting on the sidelines, and that's why the market moving up with low volume would be considered kind of a
mhm.
bearish signal, or how do you see that?
It's such an interesting question, Brian, and I'm really happy you brought it up because it's very common to see disagreements about this sort of thing online and just it's interesting to see people's thoughts. And this is something I've looked into. So as far as the kind of, I'll say, major market indices and ETFs go, generally kind of what's most accepted in terms of the understanding of volume and whether it's good to be above average or below average is that typically we see markets top and bottom on above average volume. But you can see very strong, very sustained volume on just, or excuse me, very strong, very sustained trends on average volume on the indices. It's incredibly common to see that. And if we just study the last couple bull markets, you'll notice a very similar trend. Like for example, this is the S&P back in 2021, right? And you can't really make an argument that this wasn't a very stable trend. I mean, every single dip was bought, very clear uptrend. And for the most part, there's very little above average volume. If we put the average somewhere around there, it's just an approximation. The market moves significantly higher, hundreds and hundreds of points higher with no big buying volume outside of the dip. And you can see this sort of same action all throughout the indices. And this is kind of the way I like to think about things. In my opinion, and in the opinion of a lot of others, the markets bottom on above average volume, but they trend on average or sometimes even below average volume. And the thinking behind that is that above average volume happens when market participants capitulate, meaning they kind of just panic and exit the markets. And typically, most people are going to be selling at the lows. Most institutions are going to be cutting at the lows because that's just human nature, right? Things look like they can't get any worse or are going to get much worse, and they decide to sell. Anyway, that's an aside. But just looking at the S&P over the last couple of years or 20 years, it's pretty evident that bottoms happen on above average volume, trends happen on average volume. And there's going to be some cases where that's not true. But for the most part, I mean, you look at the last couple major dips, COVID, even some of the swing lows in 2022, and our recent dip back in April, every single one of these lows were found on above average volume, and these trends were very sustained on super normal volume. And there's a reason that that's the case, at least for the ETFs. I can't remember it off the top of my head. I think, yeah, I'm not even going to try and speculate. There's some things that I looked into that I don't remember, but that's kind of how I look at volume on the ETFs, which is different than individual stocks. So individual stocks, I wouldn't really like to see a name trending higher on just average volume all the time. You do want to see, and Apple's a crazy anomaly, looking at the weekly here. But for our individual stocks, you really do want to see kind of rising volume on breakouts and high volume on lows, because now you're really seeing buyers focused on the individual name rather than the overall ETF. So anyway, you can see just very clearly in Apple here, right? Two of the strongest breakouts recently came with significantly above average volume. And if you look at the S&P during the same period, you didn't really get any of that. The above average volume again was at lows, right? Both recent lows, we saw above average volume. And throughout entire trends, you don't really get anything significant, or at least to the level of these lows that were set. So anyway, Brian, I might have strayed away from your question, and your questions usually do make me ramble a little bit. But did that kind of give you what you were looking for? And is there any follow-up question that you might have?
It did. So the historical trend line that you had showed in the 2021 bull run, it looks like that there is a gradual ramp up in volume. And so would it be fair to say that an increase in volume generally correlates to larger market volatility or just a general change in market condition as far as pricing goes?
I would say that's a fair assumption, specifically for the ETFs. Or when I say ETFs, I'm mostly referring to the S&P 500 ETF, Russell 2000 ETF, that sort of thing, major market indices. And I mean, I think it's proven by this example alone. I mean, you look at every above average volume, and it either corresponds to a top or a bottom. Never really a breakout, never really a trend. It's just a top or a bottom is where we see that above average volume. You really don't typically see that volume surge in on these indices on breakouts. It just doesn't really happen. And it's normal too. There's nothing wrong with it. And I think that can be kind of a misconception is people treat these major market indices like they do all the individual equities. Um, but it's just not how they behave.
Gotcha. Thank you. I really liked your, analogy as far as market capitulation goes. Volume equates to market capitulation.
Oh yeah, I mean, absolutely, and I'm happy it resonated with you because yeah, I mean, it's pretty easy to see too. Like, you look at every single dip recently, and you never know when the markets are going to bottom. You never know when the amount of volume is truly capitulation. It's so easy in hindsight for me to say, look at all these lows, here they were, right? It's so obvious now. Um, but to an extent, when volume reaches thresholds that we haven't seen since COVID lows like this recent April low, we saw an amount of volume that we literally hadn't seen since a global pandemic. It's probably time to start thinking, hey, maybe the lows could be in, right? Or just maybe we're closer to a bottom than we are to a top. It's never possible to identify the bottom in real time. But obviously looking back at hindsight, we can tell pretty easily, you know, we should
Is
have
there is
been
there a
able to
way
see
to
this.
separate out order flows on level two from buy and sell side so you can understand the buy and sell orders and the volume associated with them?
I think the answer to your question is no. Level twos only represent transactions at the bid and the ask. Well, yeah, level twos, well, sorry, time and sales, excuse me, represents transactions that occurred at the bid and the ask, not buys and sells. So transactions are usually red and ask side transactions are usually green. Another thing to kind of keep in mind is that technically speaking, every transaction in the market is both a buy and a sell, right? Because shares aren't appearing out of thin air. So for somebody to
Yeah.
buy, well, there has to be somebody selling on the other side of the transaction. So kind of the only way to know if it was really a buy or a sell or have a good guess is if it happened at or near the ask or at or near the bid. Because if your market selling, it's going to list at the bid. If your market buying, it's going to put an order in at the ask. Um, so anyway, there's no real
Gotcha.
way to tell ever. You can only go based off of where the transaction occurred. And obviously what happened in price after is usually, if you got a whole bunch of volume on the level twos and price appreciated, well, it was probably a good chance it was a bunch of people buying at the same time and creating that imbalance.
Yeah. Gotcha. Thank you.
You got it. Great questions. All right. And yeah, Brian kind of jump started us into some of the more fundamental principles of volume price analysis, which is great. And hopefully that discussion helped you guys understand it maybe in a little bit of a different way too. Um, but anyway, some of the things that I was just discussing with Brian, I think are absolutely some of the most fundamental principles of volume price analysis. Just looking at this example alone, I like to think that kind of like I mentioned just a little bit ago, you can very clearly identify these bottoms again in hindsight, right? But every significant bottom was coupled with major above average volume. And it doesn't take any kind of genius to see it, right? If I just draw a super simple, just horizontal line where the average looks to be, right? This is just a total rough approximation. This is absolutely not accurate where the average is, but it just looks close to me. Once we see, double that average volume, it's pretty often we also get a bottom. And in this case here, it wasn't a long-term bottom. In this case here, it wasn't a long-term bottom. Here, it wasn't a long-term bottom. And here it was when the long-term bottom had already been found. Here, it just happened to be right at the long-term bottom. But at least on the major market indices, when we see volume like this, it indicates that some kind of bottom is going to be near, especially if it's right after price has recently dropped. And this is kind of one of the fundamental principles of volume price analysis, right? A lot of people like to say that price charts represent human behavior. And you could imagine, right? Think about if one analogy that I like to think about is before computer charts existed, a lot of trading was done for computer charts and computer and phone trading. A lot of trading was done in what was called the pit in the New York Stock Exchange. And you could hear people's trades just by hearing yelling or screaming for trades, right? If people were trying to get in, they'd be yelling to buy or yelling to sell and fighting people and pushing people around. You could sense the urgency. And if it wasn't an urgent environment, it wouldn't be as chaotic. And I like to think that these high volume days, and in this case, weeks that we see represent, some very chaotic environments, right? You could imagine we're seeing double the amount of people trying to trade or trying to buy and sell for whatever reason during these periods, right? On this week, we're seeing basically double this rough average. On this week, we're seeing basically double the rough average. And we don't need to know why people are trading so significantly, but all that matters is people are getting really, really, really active. And when we see this amount of shares changing hands, very, very commonly, something is going to change in the market, whether it's a breakout, whether it's a top, whether it's a bottom. We don't always know. We can use context to our advantage and figure it out. But very commonly, it's some kind of turning point or some kind of character change for the market. And that's what can make volume so powerful is it really does give you a window into the mind of, I'll say, the masses, right? The one most important thing to realize, and hopefully it was already clear based on us reviewing some of the financial metrics behind volume, is that this isn't, grandma and grandpa trading. This isn't you and I trading. The amount of money it takes to create a volume bar of this magnitude, this is almost 1 billion shares trading. Even if we say this is an average price of $500 per share, that's almost, let me think, let me make sure I do this math correctly, $500 billion traded in a single week on a single stock. $500 billion. And I mean, I don't know the metric off the top of my head, but I think the global or the total amount of money in the stock market in terms of valuations is like, I don't know, this is probably going to be way wrong, but I think it's somewhere around 40 to 50 trillion. So this is almost 1% of the total, I'll say, valuation of the market being traded in 1 week, 5 days. It's crazy to see this sort of money. And that's when you know you need to be paying attention, right? And volume price analysis, it can be something that certainly is very obvious in hindsight, but it's also something that we can catch in real time too. And the most important thing to understand when performing volume price analysis is that you're never going to necessarily catch the bottom or the top, right? And that goes with any sort of trading strategy. Your goal should never be to catch the bottom of the market or to catch the top of the market. It's just so rare and so improbable. But for an example like this, and I just want to focus on this example on the S&P because it's so good and it's so relevant. April lows, right? A lot of you probably thought, things were pretty bad. And maybe I did too. I really can't even remember anymore. But tariffs didn't look so hot. It didn't look like a super positive thing for the world, and clearly the market wasn't loving it. And just take a look again. Look at the volume that we saw at these lows. It's volume that we hadn't seen since what I believe is the invasion of Ukraine by Russia. I believe that's what happened on this day. I can't remember. Maybe it was this day here, which it's also very close to that. Obviously, a massive, massive world event. It's going to spook a lot of investors. And also, the amount of volume that we're seeing was on par with the amount of volume that we saw during COVID, right? COVID being, I don't need to remind anybody, I'm going to say it anyway, a game-changing global pandemic, something that we've never seen before in the modern age, something that's new to so many people that nobody knew how to handle. And we're seeing the same reaction, same amount of volume coming in as we're seeing tariffs, right? Something that the market's seen before, it's experienced before. It's not that crazy. The world's not going to end. So again, that doesn't necessarily mean by the first day we get this amount of volume. Could you have done that in hindsight? Yeah, 100% you could have bought when we first saw this amount of volume. No problem. And it would have worked. But that's so hard to do in real time. And it's super unrealistic. Could you have bought on the second day where we saw the same level of record buy volume? Sure, right? You absolutely could have. But who in their right mind would have bought let's see what this was, 10% green day in the S&P, right? Nobody's really in their right mind going to do that. However, as volume price analysis traders, right, what we can do is analyze not only changes in volume, but also changes in structure. And this is one of my favorite examples ever in terms of volume price analysis. And I'm just going to walk through this in a little bit more detail because I truly do love it. And I think it illustrates the concepts of volume price analysis so well. So check this out. We've established that during this period, these couple days, we got record volume on the S&P. I mean, we don't often see volume like this. It's basically a 1 in 4, 1 in 5 year event. It's not something that happens often. We've put it on par with COVID and an invasion of a foreign or sovereign country. So this is a big deal. So we see this high volume. Very easy to tell in hindsight. We're looking at this months in the future and saying, oh man, look how we could have traded this for 23% gains on the index. But what you can see, if this is all the information that you had, right? Let's say we don't know what's happening in the future, and let's talk about what we know here. We have multiple record days of buying volume, right? Volume that we don't ever see. We also have record days of selling volume. So we know huge amounts of shares are exchanging hands, right? People are absolutely modifying their positions in the stock market, whether they're doing buying, whether they're doing selling. We don't know for sure, although it certainly, again, in hindsight, looks like they were doing more buying than selling, considering price moved higher. So what can we see here? Again, I'm not expecting anybody, and I'm not acting like anybody could have bought any of these days. Was it possible? Sure. Was it easy? Absolutely not, right? I can't imagine buying a 5% move lower in the S&P, and I can't imagine buying a 10% move higher in the S&P. It's just so unrealistic. What I can imagine, though, is buying some of the change in structure after these lows, right? So check this out. We get higher lows, right? We set this initial low at 480, which also happens to be prior all-time highs from 2021. Decent level to come back and retest. We set this higher low, right? That's a positive sign. We start to leave some bullish gaps behind, right? That doesn't happen in a downtrend. We don't leave bullish gaps behind. Here, when we had this bullish gap, it was filled 2 days later. We leave bearish gaps behind in strong downtrends, right? Here and here, right? Bearish gaps in the downtrend. Also, we don't typically see moves above the short-term moving averages hold in downtrends, right? These are the short-term moving averages. Here we got sold. Here we got sold. Here we got sold. Here we got sold. Here, we're starting to gain some traction above these moving averages, right? So let's just list out the things that are starting to work in our favor. One, huge volume at, or let's just say historical volume. Two, retest of prior all-time highs. Three, bull gap, right? So we're starting to see some changes. The next thing is, again, number 4, holding over short-term, let's just do ST EMAs, right? So starting to hold over some of the short-term moving averages. In my opinion, and again, obviously this is in hindsight, it's so easy for me to look back at any chart and tell you where you could have bought and where you could have sold. Anybody can do that. However, it's important for us to learn from these examples and apply them in the future. But this is absolutely a spot that you could have been a buyer, right? Because now we very clearly put in what could likely be a low. We've set a higher low after this big, huge low, and we've clearly started to hold and change structure, right? Notice how the character of price action is so much different here than it was here, right? If you look at the price action in this box, very clearly a downtrend, right? You don't need any moving averages or fancy indicators to know this is by and large a downtrend. Lower highs and lower lows. There's no debating it. Here, some of the cracks start to show. If you look in this box, this does not look like a downtrend anymore. Higher lows and a higher high. Things are starting to change, right? And this is what I like to call a character change. Price is now behaving differently. It's something for us to pay attention to. And this works both directions. I'm just focusing on an upside example because this is just what came to my mind first, but it works in both ways. And here, very evident character change, right? The EMAs are now flipping to positive with a 10 EMA above the 20 EMA. We're starting to see price action hold above prior highs, right? Keep in mind, This was, and if we just pull back some of my headlines, this was the day where world tariffs were paused for 90 days, right? Trump said, okay, no more tariffs for 90 days. Great. When markets start to hold above that level and treat that as support, probably something to pay attention to. And this can be the power of volume price analysis, because not only do you have all these things going for you, but you also get an above average volume hold of the EMAs and a close near the highs, right? This is basically all you can really look for. In my mind, this is an absolutely A plus bottom, right? And we don't have to enter at the bottom to capture it. Funny enough, we're entering 14% higher than the bottom. We missed out on 14% of gains in order to get an entry like this. And you're not always going to catch the bottom, right? It's just so difficult to do in real time. It doesn't matter. This could have easily continued another 20% lower, another 10% lower. If tariffs weren't paused for 90 days, it would have. But that's not what we saw. And the bottom did form, and you have a perfect entry here, right above prior highs. EMAs flipping positive. You have these prior reasons to be a little bit more bullish than bearish, right? Historical volume at the lows. We held prior all-time highs. We're leaving a bull gap behind, and now we're above the short-term EMAs. And from that entry, you would still be in the trade if your stop was a cross of the EMAs, right? If you're stopping, I probably shouldn't even have said that because that's totally hindsight trading. Honestly, I probably would have stopped out here. Probably would have stopped out on the close below the EMA. So let me be more realistic and not talk like that. Regardless, excellent entry here, right? And again, anybody can say a good entry when you've zoomed out and in hindsight. That doesn't necessarily mean it's the only trade you took, right? And even if you missed this one, well, you could wait for another setup, right? Let's look at some other potential setups. Now, after this kind of breakout occurs, we leave another bull gap behind. There really shouldn't be any question that we're in a bull trend now. Even if you're a little bit more hesitant, once we set new all-time highs, there really shouldn't be a question if we're in a bull trend or not. And there's a couple other potential entries that you could have taken, right? Here, this break higher, right? Now we've established the trend is up. Here, above this spot, right? It would have been a little bit of a difficult trade, but a possible one. Above these highs, right? So anyway, I'm not here to continue to hindsight trade and tell you all the places you could have made a whole bunch of money, because that's not what it's about. But this just helps you understand how volume price analysis can be so powerful, right? High volume can be such a strong indication of a turning point in a market environment. We see it all the time. And sometimes it's a bottom and sometimes it's a new trend beginning. NBIS is an excellent example of this as well. And so many of these kind of high flyers or momentum stocks have been doing the exact same thing, right? You see significant volume. Let's just zoom out really quick, or let's zoom out on the daily. Let's do it this way. So NBIS, this is the highest volume since IPO. Never had higher volume than this day. It's going to be important, right? You can't argue about that. It's going to matter. Here, volume that's on par with that same level. And even this volume here, going to be important, but that's a different concept that we'll talk about later. Here, highest volume again that we're seeing. That's going to be important. Here, once again, now the highest volume ever again. It's going to be important, right? When we see these sorts of what I like to call highest, this isn't what I like to call, this is something that I learned from others, but highest volume ever, or HVE candles, whatever you want to call it, it's always going to be significant, right? Because this just goes to show people are absolutely piling into this thing, right? They can't get enough of it. And when that starts to happen, again, it's not mom and pop buying, right? These are institutions buying. 88 million shares traded on this name at it. Let's just call it an average price of 100 just because it's easier for me, even though that's not true. That's almost eight, let's see, $8.8 billion traded in this name. The market cap of this name is 30 billion something probably as of today. So a third of its market cap traded in one day. Again, that's not mom and pop buying, right? That's institutional buying, and they're not buying because they think the name is going to go lower, right? Obviously, they're buying for a profit. And this was one that I talked about in the past. I never actually entered here. I personally was waiting for a move back into the EMAs on this one. I wanted to see it retrace. Literally, if it retraced for one more day, I would have been able to get in it, but it didn't. And then it did all that fun without me. And I finally got an entry down here, which, that felt good. But anyway, Great question, DJ. Yeah. So DJ says even if the bar is red, it means there's buyers. So in this case, the bar is red because the closing price is below the open. So intraday price closed lower, but price advanced 50% from the previous close to the following. So price doesn't go up 50% without people buying, right? It's not like that's just going to happen on a bunch of sellers. So in this case, yes, 100% volume bar is red, no denying it. But it's not selling volume. It can't be, right? These are 100% buyers. There's no way these are people selling. And certainly there is some people selling, right? There has to be. The market's a zero-sum game. In order for people to buy, people have to sell. But in this case, the imbalance between supply and demand is certainly very evident. So Brent says, it sounds like I'm not opposed to buying on red days near support, as opposed to waiting until a green bar closed followed by another bar. Generally speaking, I guess I'm not as concerned with, yeah, it's hard to say. I'm not personally super concerned with, I'll say, the color of the bar when I enter a given name. Just to be clear, I didn't enter this name here. I did not buy this. I'm not going to act like I did. One name that's, I'll say, somewhat similar, but not quite the same that I did get involved in recently, at least in the last month or so, was Rocket Lab. And it showed very similar characteristics, right? Very similar characteristics. So I was in actually before the breakout, which was not necessarily a good or bad thing. It just was the case. And I was entering not necessarily on a green or red bar specifically, but I was liking these higher lows off the 50 simple moving average among plenty of other things and entered on this day. I actually bought more on this day, right? And the way it closed, nice rising buy volume as price moved higher. And again, I continued holding through days like this and this and this because we see sustained high volume. And again, we don't necessarily know that the day is going to close on high volume at the open or during the day. You have to wait for the candle to close. So for me, I'm always trying my best to trade closed candles or at least trade setups based on closed candles. But my entry, it could be when the bar is red, when the bar is green. I'm trading on what's already happened on the chart. So I'm reacting based on the information that I already know has happened. And in this case, I was reacting to all of this. All of this was what I was reacting to. Obviously, I had no idea, what it was going to do after that. But that's what I was trading. I hope that helps a little bit. Yeah, lemonade's another great example, Norman. I appreciate you bringing that up. Yeah, it's an excellent example. Oh my God. It closed up 30%. Oh, that actually kind of hurts. Damn, dude. Wow. I'm not even gonna talk about it. Anyway, yeah, this is a great example of that, right? Again, it's not mom and pop buying. And this thing does this on every single, oh, not every single earnings, but on its two most recent earnings, it's had the exact same behavior. And I don't want to make promises or guarantees, but I would be highly surprised if this name was not higher than the current price in, I'll even say a week. That's what I'll go out and say. And again, this doesn't mean full port lemonade calls because I won't be trading it likely. But I would be personally shocked if this name isn't or doesn't trade a higher price within the week. I wouldn't be surprised whatsoever if it set a new high tomorrow. It's so common to see follow through on buying like this. I mean, look what it did just the last time, right? Record buying, it continues higher, right? After this record buy day, it moved another 23% higher. You look at, what's it called? I mean, you could look at plenty of names. We could go through plenty of examples. Um,
Unlimited, would you wait for a retest at the,
you're
I don't know, 70 mark
You're
and
a
enter
little bit laggy,
longs, or how
Norman.
would you?
Honestly, um, for me, the only way I would trade this name is if I was already in it. And the way I would have already been in it is probably an opening range breakout. So when it broke this opening range on the 5 minute, probably would have traded it then. And I obviously didn't do that today. Um, or I would have already been in it from a prior trade. You kind of could have entered it there on that breakback of the EMAs. It would have been difficult for me. That's not really a setup I would have traded, honestly. I don't think I would have traded that. Maybe I would have, but I didn't. Doesn't matter. So I either would have been in it from here or taken the opening range breakout. And if I didn't do either, I would personally wait for it to set back up. I don't think I would chase it here.
Yeah.
You know, certainly could day trade it above the highs, but for me, the risk to reward is now gone. I would have wanted to enter in the 70s, or enter back in this right here is where I would have entered. When I first started looking at this name, I was looking to enter there, but didn't. Um, anyway, yeah. So
Uh,
Brian says, "Oh, sorry. Go ahead, Norman."
you remember that ticker you were playing, the energy stock, LEU?
Yeah,
There's
of
a
course.
there's a company similar to that setup. Obviously, it's not at the $300 range right now, but the company I'm talking about is BE. B
Oh,
Energy.
yeah. That's okay, Norman. Yeah,
Oh
that's
my
great. That's
God, that
literally
thing's so hot right now.
yes. That's the next chart I was going to pull up because I think it reflects what Lemonade can do very well. And again, it's not the same stock. It's not the same industry. Nothing's the same. But this is the sort of setup that I'd be looking for. Like for example, on BE, you got plenty of these gaps higher here, here, here. And you know, you certainly could have bought the highs above the gap, but in my opinion, there was better setups basically every time. One setup that I really liked on BE that I'm just still kicking myself for not trading, honestly, is here, right? It started to put in a pretty nice bottom. You had, look at this, massive, massive sell volume, right? Sell volume that we hadn't seen really in months. We haven't seen that amount of volume, huge sell volume here. And then 2 days later, we're back above that prior close. That's a buy for me, right? And this would have been, I saw it 1 day or 2 days too late. So I didn't take it, or maybe I did see it in time. I don't remember, but I didn't take it. It doesn't matter. But this is a buy for me, right? You see huge sell volume, and then we just make it back above the highs like it's no big deal. To me, that means people accumulated on this day. People were really trying to buy up the shares that were getting sold. And same thing here, right? We got another gap higher. You got a decent setup, not as good at the EMAs, right? Trading back above the highs of the high volume day as support. And again, another freaking gap on earnings. I mean, this name is just an absolute monster. Yeah, these are the names that you want to be in. SanDisk is another excellent example. Not quite as much volume price analysis, but it exhibits the characteristics of just a massively strong trend. I mean, look at this. This thing is up 300% in basically 3 months. One thing that I mentioned in lecture recently, and this is something that, you know, some people might take offensively or not agree with, and that's fine. But typically when a stock goes up 100%, it's probably going to do it again. And again, that doesn't mean get long on every name that goes up 100%. But when a name goes up 100% and the chart looks like this, where literally every single day is green on huge volume, they're probably buying it for a reason, right? There's probably a reason that people are getting involved with this name. And it just continues above the moving averages. I mean, this is nonstop. This chart will probably be in a textbook in the next couple of years. I would imagine it'll probably be in a textbook.
These are the type of companies you buy dips on no matter what, right?
100%. And I honestly, Norman, if I wasn't, I think I don't remember what else I was involved with here. I was watching it here and I didn't do it because I was involved with other stocks. And obviously, it's so easy to say this in hindsight, but I should have showed that other shit and got in here because this is just, I mean, this is the strongest stock in the market right now. SanDisks, MU, these are the names to be involved with, memory storage. And even here, look at this. I planned the trade on this name, didn't take it. So
Bro, you know
anyway.
what? What stock I actually pulled up today, and I was actually kind of shocked. It's been dead for a minute, and I think you used to trade it a lot. SDEG, I believe. Solar.
SEDG. No, I never traded that one. Oh my God.
Are we back? Are we back, Toasty? Look at the 5 year.
Dude, the fact that this thing didn't gap up is crazy. Yeah, I was looking at this.
You see the volume too? It's like
Yeah, I like this space. I do like this space. I don't like the daily chart is so choppy, which is kind of why I've stayed away from it. Same with Run. I traded this one, another solar stock recently. I've just been staying away from because the daily chart is so choppy. You know, it had some good trades. Well, I was gonna trade this move, but I freaking left my stop loss at break even and it took me out, but that's my own problem. Um, but anyway, nice move there, and looks like it's setting up for another one. It probably will rip on earnings, honestly, the way this is going, but who the hell
Can we look
knows?
at Western Digital? It's
Oh
similar
yeah.
to SanDisk, but hasn't had the same price appreciation, or maybe it has, and I just haven't been paying attention. But I feel like it has room to move higher.
Yeah, I mean, to be honest with you, Brian, I'm thinking it's just moved recently, reasonably similar to SanDisk. It's a little bit less volatile, so that's probably part of it. But yeah, it's the same thing. It's these data storage names. I would say SanDisk has been slightly stronger in terms of price action, but it's still been, a clear winner. I mean, I'm not one to call tops, so I'm always going to agree with, if a name's in an uptrend, there's no reason it can't go higher in my mind. So yeah, I agree with you. I don't see why it can't go higher today. Until once we saw some kind of price action below these EMAs and set maybe a lower high and lower low, I have no reason to expect this name to not go higher. Now, again, just to be clear, Brian, that doesn't mean I would be getting long here personally. It's just way too extended for me to enter right now. This would have been the only place I could have entered, maybe on this breakout here after this consolidation. But for now, I couldn't enter this name personally where it is now.
Yo, Toasty.
Yeah,
I know you've been shopping at Sprouts, bro.
no, I haven't.
That stock's been dead, bro. What do you think? SFM.
What's the ticker? SFM. Oh my goodness. Yeah, I remember this one was just such a winner through 2024. Yeah, I don't know what happened. Um, I don't know, bro. It's not for me. It never really was, though, to be honest.
Can you mention something like we talk about stocks to be in and then stocks to not be in, you know?
Yeah, and this is one for me to just avoid. And you know what? I've traded a lot of stocks that just didn't end up being winners recently. I mean, I'm on a pretty decent losing streak right now. I think I'm 0 for 4. Um, and it sucks, but you can't let it shake your confidence, and it's just kind of part of the game sometimes. But I've had a little bit of a rough go these last few weeks. It's been a difficult market. Rambus was a tough one, stopped out here and it ripped higher. Ampac, same idea, stopped out here, ripped higher. So been a super choppy market and kind of chopped me up a little bit there. Nevius was a tough one. I mean, entered here and then it just does this. Like, come on, the name drops 20% in 2 days. It's like, you got to be kidding me. Some of these names are just so volatile. Um, but sometimes that's what happens with these market leaders, and it makes you just look at names like SanDisk and you're like, oh man, I really wish I was in this name. And it just fuels you to keep looking for winners like this. So anyway, yeah, there's names to be in and names to not be in. That's what stop losses are for. It should get you out of those crappy names pretty quick. And that's why you got to keep scanning and looking for these quality names, because they'll show themselves. And, I personally, again, had a chance on SanDisk, but I didn't take it, and that's my own fault. So anyway. Yeah, we got a question on implied volatility from DJ. So I guess when you say this, I assume you're referring to volume. Does volume have anything to do with implied volatility on options? It really depends. There's no direct correlation. If we look at a name, let's just go with the SPY. And let's just add a quick implied volatility study. Oops. So this will show the historical implied volatility. You'll notice here on this day, and I'll just zoom in a little bit, shows us historical IV. So when the S&P dropped, pretty significantly, we see this spike in IV from 16% to 20%. But it's not necessarily just about volume. We get some more elevated volume days here, and it continues to spike. But I'll say volume is typically correlated to reasons for volatility. If we look at a name like, what's a name that didn't move recently on earnings, Norman? I don't know any off the top of my head. Something that was flat on earnings.
Palantir dropped.
Oh,
But
PLTXR should be a decent example. Yeah.
Yeah.
So check this out. Yeah, great example, Brian. Good point. I forgot about Palantir. I was thinking about Solar Edge, but I figured that wouldn't be the best example. So I mean, here you see high volume on Palantir, IV drops. So there's no correlation here. And the reason that IV was elevated before is because the market knows we're going into earnings, right? Market makers understand that earnings is going to create volatility. So you see that tick up in IV, which was pretty obvious over the last few months, right? Clear trend higher in IV. And once earnings is through, we see a big drop in IV, right? Because earnings are times when we see those significant events. Let me think of another decent one. Or Nvidia might even be a good one. Into its recent event, yeah, not a bad one. So the event I think was, let's see, I think the event started this day, whatever it was. I don't even remember what it was called anymore. And you can kind of see IV creeping up as we approach their event, and now IV staying high because earnings is right around the corner. I can't personally explain this. I don't know what the hell's going on here. But anyway, yeah, so I wouldn't personally say that IV is correlated to volume. I would say there's, what's that saying? is it causation, not correlation, maybe? Usually people say the other way around, but I think implied volatility and volume are impacted by the same thing, but they don't impact each other. It's something else that causes volume to enter the market and IV to rise, like a news event.
I kind of have an aside question to implied volatility and like stop loss.
Yeah, please.
When we have events like yesterday where we have a higher volume day in the red, and implied volatility gets hit pretty hard on long dated premiums, what do you do as far as like a recovery strategy? Do you just get stopped out and move on from those positions now that the premiums have been hit pretty drastically and IV just isn't the same as it was a day ago?
Mhm. Yeah, Brian, I'm not going to lie to you. I'll give you the total honest answer. There's been multiple of these dips in the market recently, and what I've actually been doing is holding one extra day. And this is in my tab. You could see it. For better or for worse, at least for like I believe we did this on AMPX and Rambus potentially, maybe just AMPX. It had a big move lower, and recently in this market, those big moves have been getting bought up at least for a day two to kind of reset. Yeah, I think it was this day here. So AMPX this day closed below my stop. There's no denying it. And God, I can't remember when I stopped out now. I can't remember if I stopped out this day or the next day, honestly. Doesn't matter too much. I've been giving it just one extra day. But I will say the reason that I can afford that most of the time is I'm either in long dated calls or shares. So one day, even if it moved a couple percent lower, that's really not going to break the bank. And if it just resets a little bit, 1% higher, it gives me just a significantly better sell. So that's kind of what I've been doing. I will say in general, if market breaks below your stop loss, or if a name that you're trading breaks below your stop loss, you got to sell. Like there's no questions about it. You got to be selling or looking to sell, especially if you're in something short dated. Don't play that game because it's just always going to come back to bite you. If you let something run down 50, 60, 70, 80%, it's got to at least double just for you to break even. And that's a lot easier said than done.
Yeah. Can we look at Broadcom?
Yeah.
I'm in a 1121 400 call because I saw a really bullish flow come in last week. And it had been kind of retesting, and I was looking for a bounce off support. We then ran into yesterday, and we had a great day of recovery today. It was not as strong as some other market leaders like Marvell, but what would you do in that position? I'm down 50% on the premiums.
Yeah. 50% is a tough thing to be faced with, right? Because you're kind of at a spot where it's already going to be hard to recover. There's no way around it. And you kind of ask yourself the question, well, should I just keep holding? And what's another 50%? What was your stop originally going into the position?
I mean, we gapped down pretty drastically, like 30% in one day.
Yeah,
And so it went past my stop. My stop was 360, share like daily close. And
gotcha.
we just gapped down below that to like a 353 opening.
Yeah,
And that, it kind of just took me out.
yeah, I can understand that. It's hard and you're still in the position. Um, Looking at the chart from an objective basis, the 360 level is pretty important, and I think you recognize that clearly based on how you defined your stop. Real suspicious, just 5 days off the 360 level earlier, and then also here, clearly it's the level to beat. It's our prior swing high, and also where we're fighting as of the close today. My opinion is that the weekly still looks decent. You're still holding that 360 on the weekly, but obviously the daily isn't so hot. Um, if I'm in your boat right now, the hourly doesn't give us much. You got to have some stop, right? And that it's not ideal to be changing our trade plan after we're already in it because it really just justifies us from doing worse things and giving ourselves more damage to the port. What I'd say is maybe you have a decent stop around 354. You get an hourly close below there, and you just move on with it and call it. Because I don't think you should be making excuses for yourself to continue to stay in the position. What I really want to tell you is if it just no matter what, if it opens below 360 tomorrow, you sell it. But to be honest, I don't think that's what I would do if I was in your same position. I'd probably have at least some kind of new stop if it happened to blow past my stop and I didn't sell. So I'd probably be watching this hourly 355 close. If it closes below, I'd cut my losses and move on. That's probably what I would do.
That's honestly kind of my thinking as well. I was thinking on the daily, if it closes below 360, I would really consider just cutting the position.
Yeah, it's generally the same idea. I don't know which one would end up being tighter. It just depends. The one thing that you have going for you is the market still looks fine. You know, the market's doing nothing wrong. It's holding the moving averages exactly where it needs to. So as of today, the market is, like I said, doing no wrong. Small caps look a little bit rougher than anything else, but that doesn't matter for Broadcom. But the Qs look fine. Some weakness after hours here, but doesn't matter until the open. So as far as things go today, there's nothing really too much to stress about, but you know, if you get a close below today's lows on the indices, it's not going to look quite as good.
I haven't looked at this in detail, so I might not be super correct in how I say this, but this most recent recovery, both kind of like we had a little bit of a pump on Monday, then obviously yesterday, and then today, it seems like money has been going pretty heavily back into tech mega cap. And going back to like my original question, is that a concern at all in terms of most of the market being kind of being lifted up by a few names?
Yeah, I mean, I think you're highlighting a lot of investors' concerns right now. If you look at, you know, the equal weight S&P, which is RSP, this thing's done nothing in basically 3 months. It's literally gone nowhere, while the indices have set many new highs. So that alone is indicating concentration in some of the larger weighted names. If you take a look at even QQ or QQEW, QQQ equal weight, it's done a little bit more over the last few months, but it's certainly much weaker than the Qs as a whole. Actually, today it outperformed the Qs, funny enough. Oh yeah, wow. Okay, so a decent day for the equal weight Qs actually outperforming a little bit. Um, in general, though, you've highlighted the concern of many investors now, which is just the lack of breadth as we get a little bit later into this trend. You know, a lot of people typically regard this sort of market environment where the leaders have really waned down to a small group of mega caps moving the indices higher as a potential signal for a short-term top as we wait for breadth to kind of reset and return to the rest of the kind of market. And that's a very real possibility. I'm not acting like, you know, the bull market's over and there's a bear market inbound, but you know, you always got to be a little bit open-minded and understand that when we see this sort of concentration, it's not a great thing, you know, to only have a couple names in the market basically controlling everything. Certainly not a positive thing. So my perspective is continue to take buys at areas that make sense. You know, I'm not going to be one that buys names that are significantly extended from the moving averages. I want to buy quality at high quality entries and sit in them. And if I need to stop out, I stop out. And if I need to, you know, sell, I'll sell, whatever that ends up being. But until we have kind of, and that's kind of my philosophy, whether breadth is good or bad. But in general, I'm going to continue looking to buy quality at low risk entry points, which I would say, generally speaking, AVGO fits within that sort of criteria. It's held up pretty well over the last few months. It's been a little bit stronger than I'll say the majority of the market, which is a positive. Strong earnings too, so you got a lot working in your favor. I wouldn't make it like it's not my favorite setup, and it's probably something that I wouldn't be in personally myself, but that doesn't matter for you. You know, everybody's going to be trading things for different reasons. But anyway, I rambled a little bit. Hopefully that helps.
No, it's all super helpful. You know, I really appreciate the back and forth. On the note, kind of what you made there, I lost track of my thought. What I'm trying to say is on the topic of market rotation and kind of broadening out the rally, is there a volumetric way to analyze, segment rotation out of tech into
Mm.
different names? Like, for example, today we got private payroll data, and pretty much everything was in a mid cap company. We had a lot, like 132,000 new jobs, but small businesses lost 38,000. Would that maybe indicate, a stronger labor market in indicating a possibility, possible opportunity in consumer staples?
Hmm. Yeah,
And sorry, and is there a way to look at volume to see if anything is happening as far as rotation?
so I completely understand what you're saying. I'm looking for a graphic that I used to like, that kind of depicts where money is rotating from a high level perspective. I'm gonna just see if I could find an image of it potentially.
Toasty, can I add something to that? So what Brian was saying about like if money flows into different sectors, would that be like retail goods? Holiday season is pretty close, and we've seen Target's been dead for, I think, all this year. Retail has been getting smoked. If you think those sectors start to, like you said, they're not mom and pops. You see money flowing into that, not just one name, but let's say all of them, right? You think that would be a rotation confirmation?
I would say what you described is 100% accurate, Norman, in terms of what sector gets picked. I can't predict that, but I think you have a decent reason. What I was looking for there, Brian, was this website. I don't remember which website this comes from. I couldn't find it quick enough, but this is kind of a graphic that I used to look at a little bit more often. Which these are the Spider ETFs for kind of high level sectors. So consumer staples and technology and energy and utilities and industrial and consumer discretionary and XLB, basic materials. Had to remember that for a second. So this is one that I've used in the past to kind of understand at a high level where money's flowing. This is just one example of a tool that would assist with that. It doesn't necessarily need to be this specific graphic. Another thing that I've used in the past as well to facilitate that same sort of thinking is from Finviz. So this shows a similar graphic and makes it pretty clear, over the last week where we rotating. It looks like very clearly we're headed into financial and consumer cyclical names. Over the last month, consumer cyclicals are outperforming. Over the last three, healthcare is where money is flowing. But in terms of our rotation, it looks like cyclicals are going to be a little bit more popular for us. So if you look at, that's staples. I think it's XLY. Yeah, consumer discretionary. So you can see in general, I don't have the names memorized in terms of what's included in here. Let's double check. Okay, that's not doing what I want it to. Anyway, this
Also,
is
I'm gonna change the subject a little bit, but I just want to say something about people playing those high volatile options like Tesla or other options. What do you have to say to them, like especially if they're new and they're just trying to, make quick money because the stock moves up or whatever, like what would you advise them to start as so they won't really have a how can I explain it?
no,
Like
I get
a
your
bad
question, and
treatment of like the options market,
yeah, I'll get your question. I'll answer that really quick, and then we'll make sure we covered Brian's sufficiently. To your point, Norman, it's a great question, and I think it's one that more people should care to have the answer to. As you know, a lot of people are drawn to the high volatility options contracts, and obviously we're a group with options in the name, so maybe it's kind of implied that that's what we're going to be trading. But fundamentally, I think everybody would be really well served by trading either a paper account or even just shares for a couple months when they first start, just to kind of figure out how the market moves and understand a little bit more about technical analysis and even fundamental analysis. Because once you throw options into the mix, no matter what stock it's on, you're automatically, significantly multiplying the amount of volatility you're going to experience as an investor. And I can't speak for everybody, but in general, if you see your report swinging up and down 10%, 20% in a day, even if it's a couple $100, that'll wear you out mentally pretty quicker than you might realize. And it's just not sustainable either. Professional investors, their portfolio isn't changing by 20, 30, 40% in a single day because they full ported options. That's not how people who are successful in the long-term trade. So long story short, Norman, I think my personal recommendation to most people starting out would be to paper trade or trade shares with an amount of money that they can afford to lose. And if they really just can't accept the fact that they should start trading shares, I'd say trade some options with 2 to 3 months time on them. And the reason behind that is just to help reduce volatility in people's accounts because, as you know, the market doesn't care about your P&L. And if you are in these really volatile, kind of crazy positions, you're going to sit there and all you're going to care about is your P&L because you're new and that's all you can think about is how much money you're going to make. which is just setting you up for failure. So the more that you can remove volatility from the equation, I think the better you set yourself up for success to be able to learn.
Yeah, thanks, Toasty. Yeah, I care for the community, and I've been seeing a lot that people have been struggling with that. And maybe I'm not the perfect trader, maybe I'm not the best person, but I truly care for these people, and there's real money, it's not easy to, make $5,000 or whatever the amount they're getting burned on.
Mhm. I appreciate that, Norbert, and I think you share a great perspective. And yeah, you and I need to meet up and get dinner. You've been saying some really good stuff recently. I've been proud of you. Keep up the good work, dude. Seriously, that's not a joke.
Thanks, man.
All right, Brian, back to you. I know we were talking about sector rotation, and gotta love Norman, but he distracted us a little bit. So I want to try and wrap up with your question and make sure we covered it sufficiently before we call it a night. I just realized what time it is.
You did. I appreciate it, and I second you. That was a good comment, Norman.
Cool. Thanks, Brian. Yeah, Norman, you've been impressing me in these last few lectures. Sometimes you say some wild shit, but recently I can tell you're trying to make a change. So keep up the good work. You're doing the right thing for yourself, Norman, and just you being here, I think is I'm proud of you, dude. You got great ideas. Truly, you find names that nobody's involved with months and months and months before they're bangers. And run with that, dude. Throw a little bit of money at them once you see something you like. Don't go big. Don't put your mortgage on it, but get involved. All right, we got a couple questions that I want to just touch on because Kermit's mad I forgot about you and ignored you. Duolingo, let's just take a quick look. Not for me. It's a laggard. Yeah, it might be for you. It might be a good investment here, but it's not for me, unfortunately. Oh, well, and it just also reported a pretty awful earnings, or at least had a horrible reaction to earnings. So it's definitely not something I'm trying to get involved with. And Kermit, just to be clear, it's not a personal insult. It's just not for me. Um, yeah, I mean, maybe you could buy it on the earnings dip. It's right at the weekly 200 moving average, but I focus on leaders, and this wouldn't be one of them. Adobe would be in the same boat for me. Just not a leader. It's spacing out decently, and maybe could turn out being a good trade, but it's just not something that I'm focused on at this time personally. Okay, might be a dumb question, but as a noob to the group, you see the high win record all the OT have. Shouldn't it be easy for everyone to win in that case, as long as they use the same position sizing on each trade? Brian, you make a great point, and I don't disagree with you. I want to be very clear and careful with your wording there, though. Um, I'm not going to lie to you, Brian. A lot of what you see online, and even from our page, whether you like it or not, there's going to be some marketing associated with it. People don't lie about their win rates, and I want to make that clear. Like, nobody should be lying about the trades that they take. And as far as I'm aware, nobody's doing that. But the things that you see on our Instagram or online, it's always going to be more marketing focused, right? These lectures are where education happens. The VCs are where education happens, and the alerts and that sort of thing. It's going to be tailored to market to get new members in, right? Because at the end of the day, this is a business, and we got to have people here to keep the doors open. So I want to just preface with that. I don't want to lie to you. I want to be completely truthful in what I'm about to say, which is that absolutely, if you follow an analyst and use appropriate position sizing, I'm pretty certain you could do well in the long term. It depends on who you follow and how you follow them, though. Like, for example, if you follow somebody like Mo and think it's going to be a good idea to put 10, 20, 30, 40% of your portfolio in the SPX stuff that he's taking, you probably won't stick around for a while. If you follow somebody like Shark and you're putting, a responsible amount of money in each of your positions, maybe 5, 10% of your portfolio, I don't make guarantees, I don't make promises, but I'd be very surprised if you found a way to do poorly trading with Shark in that manner. Now, the last thing that I want to mention is that, at the end of the day, the purpose of this group is to be educational, right? It's great that the alerts are there, and it's great that people can make money from them. But our goal, and my personal goal, and I know this is one that Tilia, one of the owners, shares with me, is that our goal is actually for you to leave the group, right? We want to be able to teach you enough, make you a successful trader on your own without the need for alerts, so that you don't need to be here. Or even better, you could be the one working here. You could be the one teaching these classes and know more than me and be better than me and all the other rest of the people, right? That's the real goal. You know, we don't want you to be here for the rest of your life taking these alerts, because it's not really a long-term strategy. You know, when somebody falls off the face of the earth or is just done alerting, that would be your success going out the window. So you got to be self-sufficient in the market. So anyway, that was a longer term speech than it really needed to be, but that your question brought up some other things that I wanted to mention. So anyway, Brian, to keep it, yeah, what are the most common people reason? Yeah, this is an excellent question, Brian. I love that you're in this lecture, and I love that you're asking these questions, and I wish more people said the same thing that you do. Main reasons that people don't succeed, full porting, certainly. You know, people are always going to succumb to human nature. And if you hit 3 or 4 trades, good trades in a row, you might think that you figured it out, and you start sizing up and adding more, and all of a sudden, all that progress and more is gone. So 100%, you know, not having your position sizing under control, huge way to do horribly and be out of here in the next month. The second piece is not caring at all about education. So a lot of traders, you know, it's traders who are finding their own trades and taking them. It's very easy for them to manage their positions. I'll say professional traders at least, because they know why they're in the trade. They have conviction in the trade for X, Y, and Z. But when you're just following your own alerts or when you're following alerts from somebody else, you don't have any conviction in the trade personally. All you can do is trust the person that you're taking the trade from, that they thought about it enough. But that doesn't work, at least for somebody like me, who, when things start to go south, I'd like to understand why I'm in a position, right? Because it allows me to cut at a place that makes sense for my portfolio and my own risk. So anyway, I think that's kind of the 2 areas. Is number one, just general falling to human emotions, which is super common. And the second piece is just kind of not learning anything about the market whatsoever. If you think you're going to come in here and just take alerts, it's probably not going to work for you. You've got to spend a little bit of time learning and understanding the market. And you should want to do that too. You know, if you want to turn this into a long-term, I'll say, I don't even know what to say, a long-term passion, I'll say, you got to put some effort into it. You can't just treat it like a hobby, right? And I'm sure you've seen this sort of stuff online, but doctors and lawyers spend 4 additional years in school, hundreds of thousands of dollars and thousands of hours of their time to become experts in their craft. Don't expect you're going to show up to trading and next month you're going to be a legend, right? There's people who have been in this business for 30, 40, 50 years, way longer than any of us in this room. There's people who are trading in this game with millions and billions, and in some cases, hundreds of billions of dollars, who are always going to have more information than us. And if you feel as though you're going to be able to come in and know everything and be an expert in a week or two, unfortunately, you're sadly mistaken. So the sooner that you can let go of a mindset like that, be open to learning, be open to understanding more about the market. If you are going to follow alerts, I would personally follow one person only. When people try and take 3, 4, 5 people's alerts, it always goes poorly for them, because you get yourself in a whole bunch of trades, and it's just, you're basically running 5 different portfolios at once. So I'd say pick one analyst that works for you, follow them, focus on education, try and keep learning, manage your position sizing. So don't think you're going to trade with large amounts of money. Don't trade with money that you need either. When people trade and think they're going to make their next month's rent, it never goes well for them, because they do stupid stuff like buying, you know, basically YOLOs and lottery tickets and lose it all. So anyway, it seems like you have a good head on your shoulders, Brian, considering you're even in this lecture and asking some good questions. So that was a longer rant. But Brian, if you'd like to DM me, I'd love to talk to you more. I'm very confident that you can make your time here a success. You know, there's plenty of people who join and leave because they blow their ports and because they think this is going to be a lottery ticket. But I'm confident that, you know, you guys can do super well if you just put some effort in, just like anything in life, right? So anyway, volume, if you're in the same situation, please, you know, feel free to reach out. You know, I'm happy to talk with any one of you guys one-on-one or whatever, to try and help get you back on the right track.
Appreciate you, Toasty.
Yeah.
Means a lot, those words. I've learned a lot from you these past years. And yeah, trading, it's a never-ending craft.
100%. It's just like anything, right? If you feel like you're the expert at something, if you feel like you're the best at it, you're probably just blind to the fact that you're not good at all. You know, there's always going to be something better than you all the time, right? There's a very, very, very small group of people who are truly the best at what they do. And maybe one of you guys are, an Olympic athlete or I don't know, whatever else. But for the majority of us who aren't the best, we got to keep working because it's not always about being the smartest or having the most money. But if you work the hardest, you can certainly make more progress than people who are far more set up for success than any of us are. So anyway, I think that's going to do it for tonight. This lecture got really fascinating. You guys had excellent questions, and honestly, I really enjoyed this one. This was way better than I thought it was going to be. I mean, not that I thought it would be a bad class, but you never really know. Um, but anyway, yeah, I appreciate you guys so much, and yeah, hope you guys had a great time tonight. And yeah, if y'all have any questions, comments, concerns, please don't hesitate to reach out and DM me. I'm around, and yeah, always happy to help. Yeah, I will certainly. Maybe I'll join VC tomorrow morning. I was in there recently, and somebody wasn't happy that I was distracting River from not trading. So I got to be a little careful. I guess people don't like when I just come in there and talk to them. But anyway. All right, guys. Thanks so much for your time. Cooper, first class, so awesome. Thanks for staying this whole time. I hope to see you in the next one. Thanks so much, everybody, for being here. I really appreciate it. Yeah, maybe I'll join in market hours tomorrow, Kermit. If River's doing it, is tomorrow his VC day in premium? I can't talk in the voice chat pro, and I'm not allowed to for some reason. I don't know what his schedule is. Does he do premium on Thursday?
Yeah, I think it was he was in today because I was trading with him today.
Hmm.
And we're talking about a strategy about the first hour close. If it breaks the 15-minute orb on day's highs, and we're just talking about a strategy.
Nice. Cool. All right. Well, yeah, maybe I'll see you guys tomorrow and join his VC, and maybe not. Who knows? But yeah, I'll make an effort to get in there a little more often. All right, guys. Thanks so much for your time. Appreciate it as always, and I'll see you guys on the next one. Adios, everybody.